guys, welcome back to my channel. If you don't know me, I'm Angela and I make career videos here on YouTube, mostly focused on banking. Today, I am going to be talking about exit opportunities. If you're considering banking, if you are already in banking, or you're just curious about it, I'm going to talk about what the next step is after you get into investment banking. Obviously, there are a lot of options. You can go into anything, but there are a few very common paths that investment bankers generally take, and I'm going to be going over those options and what I've seen people go into being in investment banking myself, and what I think some of the pros and cons of them are, and exactly what these new jobs entail. First and foremost, I'm going to be talking about private equity. Private equity is probably the most common exit opportunity for investment bankers. Private equity firms have funds. They use these funds to invest in companies, either buying a stake or buying out the entire private company. They'll hold it for a couple of years and then exit it either through an IPO or selling it to another financial sponsor, which is another private equity company, for example, or selling it to a strategic company. They do this with the expectation of earning a return on their initial investment into this company. Notable private equity firms include mega funds like KKR, Blackstone, Apollo. Some of the pros of going into private equity is that the pay is usually higher than investment banking, particularly if you go to an upper middle market private equity shop or a mega fund. Another pro is that sometimes the work-life balance is better, but again, it depends on which fund you go to. And some people also say the work is more interesting to them and more meaningful than investment banking. I'd say from day one of joining my desk, recruiters have been emailing me about private equity opportunities. They do that for almost every investment banker just because it's such a common exit opportunity for them. Usually one of the most intense routes to go on and most competitive is to do on-cycle private equity recruiting, which is when a lot of the mega funds will do their interviews. It'll all be within a week or two where they'll interview everyone. It's like ripping a band-aid right off. But those offers are usually for 2 years in advance. For example, if I wanted to find a job fall of 2019, I wouldn't be able to start until June 2021. So that's also something to consider. There is also off-cycle, where the process will be a little bit slower and it will usually drag out through a couple of weeks, but it's still mentally draining to have so many of these interviews, and the process could take out much longer. A very common career path is the 2-2-2. 2 years of investment banking, 2 years of private equity, and then 2 years of MBA. It used to be a lot more common, but I think a lot of more people are venturing off that path nowadays and are able to find happiness in different fields. Next, I'm going to be talking about exit opportunity number 2, and that's venture capital. So venture capital funds provides funding for startup businesses. When investors put their money into a venture capital fund, they expect that they will be able to get some returns from those, and that the venture capital fund is distributing that investment amongst different kinds of startups. It's highly risky just because startups don't have a very clear idea of how their financials will look like, and you don't know what the startup will look like in 10 years. It could be the next Uber, but it could also flop. Next, hedge funds. Hedge funds hold the investments of their investors, and their goal is to maximize the return for their investors. Hedge funds use more aggressive methods in order to maximize these returns. I'd say it's a more intensive and stressful job, just because if you're someone who makes losses for the company, you could easily get the boot. And so not as many investment bankers go into hedge funds that I know of, but it is still a common route, especially if it's something that you think you would be good at. And the next exit opportunity I'm going to talk about is corporate development. Corporate development is a team that is in most companies. Essentially, this team is the one that helps the company go through different acquisitions and IPO, financings. It's essentially doing what you're doing in investment banking, but within a corporation, just because a lot of these larger companies need people to help them with thinking about what to acquire or when they should go through an IPO and all these processes. Corporate development roles generally are known to have a more relaxed environment, maybe a 9 to 7 day as opposed to a 9 to 1 a.m. day, but the pay will usually be a bit less, specifically in the bonus. You won't be seeing 100% bonuses like in investment banking, but that is in return for hopefully a better work-life balance. And lastly, a few other options that I've seen people go to are things like equity research, asset management, consulting, investor relations. These are all fields that are also relevant to investment banking, but not as relevant as the prior four that I just mentioned, but relevant enough where you could use the skills you learn in investment banking and apply it there. Frankly, I think that going into investment banking truly opens a lot of doors for you. Even if you go into something that's not relevant at all and not even in business, for example, people will understand your work ethic and know that you're able to go through all those grueling hours and have good attention to detail and are able to get things to people quickly. In general, I do think investment banking is a good first step for you, regardless of if you want to continue in finance or you want to go to med school, so on and so forth. If you're also in investment banking or you're thinking about going to investment banking, can you see yourself in one of these exit opportunities, or will you venture off and do something a little bit more off the beaten path? It's really up to you. Last but not least, yes, there are also people who stay in investment banking. I would say out of an entire class of 10 people in a group, maybe 1 or 2 will stay to an associate, and you usually make associate in about 2 to 3 years. So basically about 80 to 90% of your analyst class will have left within the first 2 to 3 years. So think about that. I think investment banks are doing a lot of great things for juniors and to try to make work-life balance better. There are more things about the culture that I think could change. But hey, maybe you see yourself staying longer as long as you realize whether this is for you or if it's not for you. You can always try something new and come back as well, get your MBA. There are a lot of options out there. Anyway, guys, thank you so much for watching this video. I really hope you guys enjoyed it and found it helpful. If you like this video, please remember to give it a thumbs up. It really means a lot for the YouTube algorithm. Subscribe to this channel if you haven't already and hit the bell to turn on notifications. I'll see you guys in the next video. Bye!